Well, it's Monday, and a lot has changed since we spoke a week ago. And we're going to dig into all of that and figure out exactly where things are. A lot of chatter around things like quantum and wash and rotations and bottoms and oxygen being sucked for the room. So let's try break it all down with our three experts here. We have Mando. Rob is back. Thank you, Rob. And Marty. And
good to see you, gentlemen, again.
I remember Rob likes to have pools in his background, and in the old days we used to throw balls in your pool to prove it wasn't a green screen. Will that happen today? We're not sure.
Not sure.
Yeah.
Probably not.
Or there's a dog walking in the background to prove as well. Anyway, Mando, how are you today?
Great, man. Great. I mean,
Yeah.
I was getting a little bit bullish on Friday, and then just seemingly got rugged. So I don't really know. I kind of felt like everything was looking good with all the. We were rallying on Friday, but everything else was selling off, and it seemed like the AI agent narrative was really picking up pace. And then I don't know if it's just people playing games on the long weekend in the US, but I'm surprised that we've dumped. Not we've dumped, but we're definitely lower to start the week.
Yeah, it's kind of up and down, zigzag. It wasn't a very good Saturday night indeed. Rob, how are you?
I'm pretty good. Just watching the market shop a little bit, and yeah, like Mondo said, thought we were gonna have a nice little weekend. Not so much. Here we are.
Well, chopping is how the market makers make their cheddar. Marty, what do you think?
Good, great. Had my 3-day conference last week. Had 384,000 people come through, which was pretty amazing. We touched on everything. We had some really, really good conversations with some key people. A little bit of hopium across the board. But as usual, I mean, don't expect much until there's market structure. I think the market makers have full control. They're running at the yellows right now to 67, probably 65,800 for the blues before they move up. Hopefully a higher low. We'll see.
Yeah, and it's a weird day as well because the U.S. stock market is closed. Therefore, the only thing people can trade is crypto. And sometimes you see a big spike. Once the stock market closes, all the volume comes back to crypto. But anyway, let's get into our story today. We've got a lot of topics to get through. This one, actually, because CTO is not here today, I will be doing a little bit of TA, but I'll be mixing it with on-chain, which is, I believe, very important. And this one is really to get to, are we in a forever bear market? Or is it a 6-month accumulation trap? Or have we hit a bottom? Or did the bull market never happen? Or is it effectively over? That's what we're going to try and get at today. And we're going to look at a couple of things to try and address that first before we get into the bigger stories. But keep that in the back of your minds as we look at this first little piece. This is what I call no mun, no fun. If there's no money flowing into Bitcoin, it doesn't go up. And we have never in the history of Bitcoin ETFs had 4 consecutive monthly dumps. And that's on top of whales over the last year or so dropping $100 billion in Bitcoin. To you first, Mando, because you understand money and TradFi and markets. When will this turn around? And this is today the lifeblood of the so-called, what was a $2 trillion asset.
I'm not as worried about the ETFs. I'm much more worried about the flows from the whales, and that's been a lot more positive, at least since we kind of hit 60K. So the ETFs is always difficult to work out because we've seen a unwind of the basis trades, and also they have seemingly been weaker hands. Let me put it that way. Like they are often like they go with the direction of the market at certain times rather than countercyclical. And what we really need to see is like the countercyclical coming back from the OG whales. So I've been less worried about the flows actually ever since we hit 60K. That they've been a bit more supportive, which is why I don't think we're just going to like fall through the floor here and go a bit lower. I think we're looking very much like we're back into that 2024 range, where we were between high 50s to mid to low 70s. We had another attempt at it over the weekend and kind of got rejected, and it now feels like that's pretty comfortable as your range. But I think we could be here for a while.
But pressing on you there, though, because I calculated that for every $1 billion that flows into the Bitcoin ETFs, it increases the price by about 3.1%. So it is very, very important as a constant drip, drip, drip money flow in. But I have a theory as to why it's not flowing in, but we'll get to that in a minute. But I wouldn't fade the ETFs entirely because they were a big part of the reason why I believe the bull market mechanics changed entirely in the past.
Yeah, I just find it difficult to work out the true nature of the flow. Let me put it that way. Like, I just feel as though so much of it is down to this basis trade, which is now almost non-existent because of the way the funding was. And what I've been watching for why we departed from all the other correlations since June was whales selling. In fact, they were selling throughout the whole of last year. And if that is turning, that to me is the positive thing from the flows, basically.
Excellent. Good stuff. Marty, do you believe in no mun, no fun?
Yeah, the only things I don't really listen to all this noise. I think it's all nonsense. The most important things to me are the correlation right now with IGV. So that's the S&P Extended Software Index. If you follow BlackRock IGV, go back to 2015, Bitcoin has pretty much followed it with a 0.88 to 0.96 correlation. So almost 1-to-1. That is literally our primary correlation. And that follows obviously global liquidity a little bit here and there and things like that. That's why we see these odd correlations with other indexes. But if you just go do a Bitcoin weekly between Bitcoin and IGV, you'll have a wake-up moment. So I spoke to Raoul Powell about this at length. Basically, there's a monetary premium that you would hope over the software itself, right? So Bitcoin is inherently a software. It's 99.999% just code. So is Solana, so is Ethereum, etc. So they're being valued as just purely their code, as their software right now, it's software. No monetary premium, which is what we would hope, right? Store of value, financial rail. But everything above where we are now was pure speculation. So we've come back to this pure software value, and we're running pretty much exactly with the IGV. So until the IGV turns around, which has something to do with PMI, has something to do with the Fed, but I think crypto's moment will be market structure. I think until there's market structure, people have lost faith in it as a store of value because every time they store value, the price is so easily manipulated. So until we have some kind of anti-manipulation, regulation, structure, I think it's just going to trade as a software, which it is.
Okay, I'll look into that in a minute.
Solana is a little bit different. I think Solana is a little bit different. I think Solana actually is starting to gain fundamentals. If you take the total stablecoin issuance on Solana, which is going up much higher than Ethereum right now, and then add the actual dollar value of the tokens issued on Solana, you'll almost come to 1-to-1 parity with its market cap right now at $80. So there is some kind of fundamental in Solana, but Bitcoin right now is a store of value, very hard to value.
And we have new stores of value too that I believe sucked a lot of the oxygen from the room, but we'll get to that in a minute too. Rob, money, do the ETFs matter, or is it about the whales and all your whale friends? Are they all buying now in Puerto Rico?
Yeah, all the Puerto Rico mafia is just doing their own thing, and like Mato talked about. I mean, that was a big thing. They were selling. It's like Jordy Valser talked about. This is the IPO moment. They're going to take the liquidity out, and good for them. They should. I know we talk about like you should never sell your Bitcoin, but if Bitcoin's supposed to be freedom and you need that to engage into freedom for the things you want to do, you sell your Bitcoin. And I just think that's going to keep happening. This was my case. I always thought 2026 was going to be a down year, like every midterm election year is. And it's not just here. I think we're going to talk about this later, but just look at the S&P 500. Just take a look at the Dow. Take a look at everything. These years usually kind of are down. And we'll see where it all goes. Me personally, I've just been dynamically dollar cost averaging. We'll see where it goes.
Exactly. Let's look at some charts because I'm the chart guy today. So first of all, the first one is what I call the optimized trend on the monthly chart. And what I look at here is this thing is the easiest way to determine when the market does turn. This indicator turned at about $105,000 and has been down for 130 days, 135 days, give or take. If we go back to the previous bear markets, you can see they were kind of less. They don't look like the first one back in 2018. It doesn't look as steep down, but that's because the dollar values it's not a log chart, it's a regular chart. And that was down 334 days, and the last bear market 365 days. So this has also fallen way faster than any historic bear market, which is important. We fell 50% in 120 days. And that's never happened before too. So the speed at which this thing is changing, the harder you fall, the faster you reach the bottom is the traditional logic. Mando, would you concur with that?
I've been really surprised at the speed of this sell-off. Really surprised, because we didn't top in what felt like everyone got liquidated on shorts sort of top. It just felt like we just started to slowly lose momentum, and then it very much started to accelerate once we broke past through 100K. So I've been hoping to see some form of a bounce here. It's been surprising to me that we haven't formed more of a bounce on this sort of dip. We're starting to now hit all-time lows for things like RSI on like the weeklies for certain of the major coins, and you're starting to see you already had a number of liquidations on the way down. But I would like to think that we can stay here and consolidate for a bit, at the very least. I don't think that the only thing that would make me think that we continue like this is just absolute panic about quantum, which I just do not think can happen. I think almost the opposite of that. So
you're stealing all my thunder. We're getting to that too, actually. We've got some good news and bad news there too. That's fantastic.
But the narrative is there, and people are still kind of semi-freaking out about it. But to see a reduction or a sell-off like this, or it's something coordinated, like you see something coordinated selling out of Asia, maybe China, it's confusing me. But right now, my base case is still this 2024 range. So if we go down to the low 70s, I think you're really meant to pile.
Great.
Low 60s, you're meant to pile in.
We do have another chart actually that speaks to your point regarding a floor. This is what we call the ATR model, and we are literally hitting level 3. So if you go back to historic cycles, the bear market can dip as far as this level and finds a floor. It's interesting here is that this exact level of level 3 is at 60,000, and we bounced clean off that layer, and that layer is calculated using a whole bunch of data science to figure out exactly where the support and resistance layers are. And also, if you draw a line between that layer and historic cycles, that used to be resistance. Now it's kind of maybe potentially becoming a floor. And this model is right about 80% of the time. And we had our first buy signal since August 2025. So from a TA perspective, that is extremely maybe positive, and that would be worthy of a DCA level. Rob, did you buy at 60K? Did you do your DCA? Or you just do it every week?
I do it once a week. I do it every Monday. So I may have missed that one, but I'm sure I'll have another opportunity because it doesn't seem like, I don't think that the bottom was 60K. And I know we're going to talk about that later, but no, I was not able to get that, but 65, 66, I'll be okay with it.
Exactly. And then we have another indicator, and we'll go to you, Marty, on this. This is the historical top and bottom indicator, and that tells you when things are getting overheated and when to start layering out. And what's very interesting this time around, and this worked in all previous cycles except for this one, normally you hit the dark orange color, and then red means get the hell out of this asset or hedge like you can be. And we never basically got out of the middle of the light orange or dark yellow range, which is very peculiar. Now, we've been in this yellow zone, which typically is middle of the road, basically exactly middle of the price action. And we have been at this level for a long time. We had a little bit of light orange for a couple of times during this bull run. So this tells me, and to you, Marty, we never had a historic bull run, probably because the ETFs controlled the narrative, or the DATs controlled the narrative. They were driving the money, and retail didn't have as much money, although retail is FOMOing into stocks again, like we've never seen before in history. But Marty, what do you think of the cycle we just went through, and we never had any type of overheating in the Bitcoin price action?
I mean, once again, I'll go back to what I just said. I sent you some charts in the WhatsApp. Just if you can put one of those up, just look at those two charts. As far as the top, if you look at a weekly logarithmic, Bitcoin touched the top of the trend line exactly before it came down to come back to the bottom trend line, exactly as one would expect. And as far as tops and bottoms go, we've tracked the IGV software ETF index since 2015. It's the same bear market, the same top, the same pullback we just had now, looking for the same bottom. There's no difference between Bitcoin and people trading software, as you know, SaaS, SaaS. And this has been something that the All In podcast has actually been talking about for a long time. So there's a lot of credibility to Chamath. Is Bitcoin is traded pretty much as a software stock. So the question is, do you believe software will appreciate? Do you believe this is the bottom of software? Or do you believe that there will be a monetary premium coming into this asset class over just software? The monetary premium comes from market structure. And the software, you got to look at AI. Is AI killing, service-based software? Do you think Microsoft's going to rebound? Or do you think AI will only increase the stock value of software? So these are the questions that big institutional traders are asking.
Well, first of all, I'll challenge you on this for a second. So for a couple of things, this is the IGB, which is the SaaS software index. Now, if you consider what drove the market in the past, Bitcoin was always correlated to the QQQ. And I apologize for Marty's chart. It's a bit of an eye chart. All I can see is very faint lines. So
the blue is the software ETF and yellow is Bitcoin. Look, software went through the same bear market. There was no FTX. All the narratives are nonsense. We've just been following software. Look, all the way.
Yeah, exactly. But now what I will argue, and Manda, you see what I see here. So Bitcoin was correlated with the QQQ, which is heavy tech, which is all Mag 7, which was 5/7 software, SaaS. And SaaS took it in the shorts hard because of the AI. So is there a correlation? There certainly is with QQQ, but that actually broke. But now it's accelerating back because of the Mag 7 component of software. Marty, Mando?
Well, remember, the IGV makeup is quite interesting. It's 10% Microsoft.
Yeah.
That's quite interesting. It's 9% Palantir. So Bitcoin has been following Microsoft and Palantir more than anything. Interesting. I mean, this is phenomenally interesting stuff. These breakthroughs.
Well, the other thing about Microsoft has underperformed the S&P 500 for the last 6 years. You're better off holding the S&P 500 than Microsoft.
But Microsoft also might benefit from Claude and Claude bots and open AI's integration with Claude. So it's an interesting time for Microsoft as well.
We will get to that. Manda, what do you make of this? Is it another one of those correlations that is just random, or is it real?
No, I don't think it's random when you kind of look at this. I think it's very interesting. Like, everyone was focused maybe on gold and global liquidity, and then this has come out of more left field. I think if you try and look for fundamentals or reasons around this, it doesn't necessarily make much sense, because if anything, as we were going to get to most probably in the next bits of the conversations, the moves here in AI hurt SaaS, but I would imagine they help crypto. Like, you're actually creating thousands of new users of crypto. So it's been a little bit difficult to work out, which is, again, why I said the only real reason it could be is that people think that somehow quantum gets accelerated in this sort of world. But that just doesn't really ring true for me. So it's difficult. You can only imagine it's because people have shared ownings of these sort of things, and that could lead to a
very good point.
Sell-off. And people have said that in some of the funds, particularly in Asia, that could have been the case. You know, that trade unwinding, the Japan carry trade unwinding has also caused an unwinding these sort of trades at the same time. So it's more like a broader correlation across a number of different things that funds in that region were exposed to. Yeah, that may be it. But you can't. There's no fundamental reason, in my opinion, that AI gets hurt by crypto gets hurt by AI. In fact, the complete opposite.
Yeah. Well, I mean, I agree with that big time. And Rob, to you, we've seen record transactions, even on things like Ethereum, record transactions on Solana, record users, adoption. Crypto's blowing up, but is it retail investors? And this is what I've been trying to get at we've been talking about convergence between AI and crypto for years, and we couldn't actually put our fingers on it. But somebody or some AI agents are extremely active on crypto all of a sudden. Who is it? Is it retail people all of a sudden found $100,000 in under their couch, or is it AI agents?
I don't. I think founder of Solana put out a post saying that it's all bots, and he was pretty much just saying this is the future of what's going to go on with crypto, a digital asset. So of course, I mean, to the points there, yes, I think AI can help crypto and digital assets, especially if we're talking about micropayments, because you can't do that right now. And if you want to do that for like API integrations, I know James, you're messing around with Mac Mini and Claude, and I'm sure these other guys probably are too. So if you know what you have to do to make these microtransactions, you're not going to use some kind of wacky legacy service. That's it. No. But can you get there right now? Is that all what it is? I don't think so, because everybody's just putting this stuff together. I don't think that there's a ton of people out right there doing microtransactions every day, all day. I can see it with Polymarket and Kalshi, sure. But as far as like the average Joe and Jane doing this right now at scale, no.
Actually, there are people, and Mano, you know this too, I think we discussed it before. There are people with their Mac Minis analyzing sentiment on X, and then they're trading off of that sentiment on Kalshi and Polymarket using crypto. Correct, Mando?
Yeah. I mean, it's very common at the moment now with the new OpenClaw setup that people are setting up essentially X crawlers or TikTok crawlers. And there's this form of like social signal trading, let's put it, where people are looking for not just meme coins, but like trends in consumer stocks, trends more broadly in the market, and then trading up the back of it. There's this one guy who's a hedge fund who did this for like, 10 years and is up an insane amount every single year, like 30%. So everyone's trying to replicate his style of trading. I don't know if I've seen that many people yet making money with this stuff. I've just seen them setting it up, and it feels like maybe you're close to it.
Good stuff. Marty, any thoughts on these? But we'll get more to AI bots and crypto convergence in a minute.
Back to where we were before. I mean, the fascination, I showed this to Matt Hogan last week as well, and he was like blown away. This correlation with IGV. I think the importance is to analyze this and to understand this more, because everything else I believe is nonsense. I think this is really what it's about. And if you look at it, Raoul Pal talks about a high beta growth or internet asset, Bitcoin, rather than a digital gold. I don't think it's got to digital gold. Its correlation with gold is literally zero. So you got to look at who are the shared investors, the large participants that are trading Bitcoin as a software. And if you can start to analyze it like that and look at the effects of AI, look at the effects of Kevin Walsh, of monetary policy, of global political tension going forward over the next months, if you believe that there will be expansion in technology, in other words, in software, then Bitcoin is a great high beta growth investment. It's got sort of a monetary premium over basic software. And like I said, if you look at the components of the IGV, it's mostly Microsoft, Oracle, my previous employer, Salesforce, Adobe, Palantir, things like that. So if you believe those softwares are going to appreciate and expand with the new regime change, then this is a great investment. If you believe in the SBR, this is a great investment. If you believe in the future rails being blockchain based and stablecoin, this is a great investment. But as far as correlations go, honestly, this is the correlation. It's being traded by large participants as a software. And I know there's a lot for people to get their head around, because we constantly search for correlation. The narratives change so fast. But this is unarguable if you look at that chart. It's the most clear correlation we've ever seen. And so adapt your theses around that. Start looking at the risk on, risk off proxy. Like, when do software traders, you remember the SaaS apocalypse? Like, when do SaaS stock move?
I do believe in Palantir, but I believe SaaS software is toast. It's going to be rewritten by AI very quickly.
That's the way to start thinking about it. We have to start understanding that.
All right, let's get back to a couple of hopium charts and wrap up the TA, and then get into the rest of the story. So the supply in loss. This is a little bit of on-chain mixed up with a little TA. This is from Check on-chain, James Check, friend of the channel. The supply region's total balance of Bitcoin. We are technically, think about it, the supply and loss is now larger than the vaulted supply, which means we are in bear market territory, deep. And this is typically when Bitcoin bottoms. Now, sometimes it pierces this lower red line and it stays down there for 3-4 months. Sometimes it pierces it, bounces back up, pierces it again, bounces back up, pierces it again, bounces back up. So here we are. This is another indicator that, okay, supply and loss in bear market territory, which is pretty high. This is another view of the same thing, but from Glassnode, from James Van Straten. On-chain plus TA means we have bottomed. So he has a cool little line, line here that shows you that if you go back through history, this chart basically, again, correlations, etc., mixing TA with on-chain, supply and loss. When it hits this level, it's a bear market bottom. The only question is, how long do we stay down here? And this goes back to my previous things, this level 3 on the ATR model, etc., the duration, the record dip, which means, again, when something dips really fast, the duration of the bear market is shorter for different assets. We've never had a situation like this in Bitcoin. But any thoughts on this from anybody who believes in the supply and loss indicating a bottom?
This has been a signal. This has been a signal for a long time in Bitcoin, right? Like the idea of supply and loss, and then realized price has always formed a pretty decent bottom for Bitcoin.
Yeah.
I still think we can chop around here. Like you can still see last times it bottomed around here, it chopped for a bit.
Yeah.
And I think you can definitely have that, but it does make you think increasingly that this could be somewhat of a bottom. The other take is, you know, the whole cycle theory, which you kind of have to slightly dismiss with this sort of view, which is a bit more, let's say, technical. But I can get behind this. Like, there's enough of a narrative here that the speed of the sell-off and the amount of people that are now not in profit, plus the idea that the hash rate has had to correct, kind of get down to this sort of level. I think it just makes sense that this could form somewhat of a bottom in Bitcoin. For altcoins, less obvious, but for Bitcoin, I think it's starting to get there.
It's actually the cost of production typically has the floor, and because of that recent hash rate adjustment took it back down to about 70K, 69K,
right,
which typically means that could also be another bottom signal. So you're right on there as well, Mando. Marty, any thoughts?
Yeah, I mean, if you believe in accumulation strategies and the large players are accumulating, look, guys, I watch whale wallets, and that to me is the biggest indicator of the supply and demand curve of this asset class. They haven't changed. They've only gone up. Binance, Coinbase, BlackRock, Sailor, their Bitcoin balances have only gone up. Coinbase is nearly at 1 million right now. So they've been accumulating. So how do you accumulate? You shake people out. How do you know when people are getting shaken out adequately? Supply and loss. That's the main. That's the main correlation. So they want to get supply and loss. If they can get people deeply in loss, is how they shake people out. People sell. Typically, they're trying to clean this asset class up. They're trying to clean the supply up. Before they're going to commit large amounts of value, they're going to make sure that they're, like Michael Saylor said on his earnings call, we need to get rid of the unknowns, right? The unknowns are the people that we're going to sell. We got to get them out before significant value comes into the asset class. So supply and loss is a great indicator of this. The deeper supply and loss goes, the more the accumulation strategy is working. It's a shakeout metric.
Yeah.
Retail buy high and sell low. So they got them to sell. If the lower the supply and loss goes, the more chances they're going to sell out of panic. Desperation. I call it more desperation, this macro cycle than need. I think people are broke. I think we're literally in the bottom of a recession.
Yeah.
If you look out of the street, don't look on chain, look in the street. People are struggling. Okay, the job market is tight, the real estate market is tight, wages are not competing with inflation. So this is the greatest supply and loss metric of all time. Yeah. People need to sell their crypto because they need to pay their bills.
There's a couple of classic ones as well regarding the recession indicators I look at look at the number of Starbucks closures.
There you go.
And you look at the revenue Walmart is making. When Walmart goes to the moon, it means nobody can afford to go to Whole Foods or other stores like that. So crazy stuff. Over to precious metals. This is one for you, Rob. And I remember way back in the day, you used to have a little bit of silver and gold, if I'm not mistaken. Way back when. I don't know if that's still the case. Way back when. But this is from Matt Hogan. Again, we mentioned him earlier. So Bitwise CIO, he is very well dialed in on the whole crypto space. But he talked about how, I always speak about things taking oxygen from the room. Like the AI narrative took a lot of maybe retail money. And for the first time ever, like when I started making videos over 5 years ago, the people that kind of followed the channel were kind of a lot of crypto only. They never bought stocks or tech stocks or anything like that. But that's actually changed over the last 5 years. So people will take, say they have $10,000 to invest, instead of putting it all into crypto, they get a black eye, kick in the teeth, and then they move to different assets. But also big investors, when they started seeing the precious metals run, and this is the thesis from Matt, is that took a lot of oxygen for the room. The Bitwise CEO says AI and precious metals help spark the Bitcoin downturn. He says, screw this store of value. We found a better one, and they deployed into gold and silver. Now, he also said 1010, the black swan we had in crypto, concerned the market. That gave, again, the kick in the teeth for people. And also we'll talk about the quantum risk as well in a second. But Rob, what do you think of this? Do you believe precious metals sucked the oxygen out of the Bitcoin room?
Well, first of all, who the hell goes to Whole Foods? The place is super overpriced. Walmart, I'm sorry now, Walmart is way cheaper. If you want to save a little bit and then put it into like assets, go to Walmart. It's great. Got good discounts. Anyhow, back to this thing right here. Yeah, I mean, this is what retail does, right? We saw those lines lined up for gold. And then we saw the lines lined up for silver. And what did they do? They bought silver at 90, 100, 110, 120. They bought gold at 4, 5, 5, 5, 5, and then it goes down. And of course, when we take a look at that, that is supposed to be the ultimate store of value. Just talk to my neighbor, Peter Schiff, and he'll tell you all about it. But these things just don't happen. I mean, gold or silver went down from what, 120 down to the 70. It dropped, I mean, massive amount. And retail pays the price every single time. But Hogan's right. These people, they follow the narrative and they go that route. That doesn't work out. What's the next one? AI. And AI doesn't work out. Now what are they doing? Now they're getting screwed over by, not getting screwed over, I'm sorry. They're going to Polymarket and Kalshi and gambling. And they're going to lose everything. And that's what retail does. So unfortunately, yes, I do believe that AI sucked a little bit out, but there is a synergy coming. It's just everything has to catch up.
By the way, Rob, people love you when you throw a bucket of cold water over them. They really do. It's like, yeah. Raw. Marty, what do you think?
Yes,
Yes,
absolutely. I think that the macro, I mean, there's only a certain amount of liquidity. The US is not being injected liquidity. There's in fact been sucking liquidity out of the system since COVID. Probably the largest regime change of all time in quantitative tightening. So there's only a limited amount of liquidity, specifically in the retail arena. And I agree with that statement. I think, people were chasing for the next trade. And so, the rally in gold essentially sucked all marginal liquidity out of the system. They would have flowed into, Bitcoin or SaaS. There's just not enough liquidity to go around. And I think the biggest event was the 1st of October government shutdown last year, which forced the TGA to drain. And the rebuilding of the TGA, I think, sucked liquidity out. That was the beginning. October 10th was crypto's moment because Bitcoin is, as close to liquidity as possible. It's very sensitive to liquidity. That was followed by later in October, the 27th, Microsoft dropped 30%, SaaS stock dropped 30%. It was all around that liquidity sponge of precious metals. Now, the question is whether it was repriced at a sovereign level to 5,000, like they did back in the 30s and 40s, and then in the 70s, or whether it was an actual retail boom in gold. And they, released the suppression mechanisms that they do commodity suppression. And that's the big question. Are they repricing gold? Is retail just following along and speculating? But I 100% agree. When retail loses money, they typically turn to gambling. And we've seen the greatest gambling regime of all time in the last 2 years. I believe retail has been extracted to the degree of around $600 billion has been liquidated out of retail gambling markets since 2025.
And Kalshi, the Kalshi founder, a Brazilian lady, is the top 10 richest person on the planet now, and the richest first self-made billionaire under 30 female ever in the history of the world. So, yeah, somebody's betting on something in Kalshi for sure. Mando, do you believe the bees follow the pollen and go from flower to flower?
Yeah, for sure. I think right now we this bit of crypto has obviously been one of the big, like most flourishing bit of crypto this cycle. So it's tough to be like that dismissive about it because I think it's going mainstream. And there's some, there's some bullish cases around the idea of prediction markets becoming a bigger thing in society. Like we saw it around the elections. That was like super positive. I felt like it has shifted slightly away from that. I don't know. I feel like society's going this way at the same time though. But I think we're going to see again, like the difference between Bitcoin and the rest of the market. I think it's quite stark in these sort of worlds. Like Bitcoin's trade, I think can catch up with gold. I do think that the use of L1s is still always going to be tied to these more speculative sort of things. It's less of a gold narrative. So, and in some ways, meme coins, perps, prediction markets, sports books, like these things can all start moving on chain. And I think crypto is going to be tied to this sort of side of our society more and more.
Yeah.
Almost.
Yeah, but by the way, there's two things. One thing is just I was going to mention regarding tax returns, but before we do, I don't know, forget the other one. I mentioned the tax returns first, got distracted by that. But a lot of people always believe this time of year, Bitcoin dips because people need to sell it to pay off their taxes. But the problem is a lot of people probably did make a lot of capital gains last year, so that's not a concern. And also in the US, at least the tax rate's lower, so don't sweat that too much. But let's move on to the next topic because I forgot what I was going to say before. Anyhow, it's one of those mornings, not enough coffee. Quantum. We're going to talk about quantum for a second. Willy Woo rattled the markets saying, okay, quantum is going to unlock 4 million lost coins plus the million Satoshi stash. First part, everybody's freaking out. It's like, oh my God. Okay, first of all, everybody, quantum is years away. All right. It's not around the corner. Second of all, Samson Mao strikes back, saying quantum computers pose a threat to Bitcoin, may prove to be the last great transfer of Bitcoin from the foolish to the wise. That's kind of, Marty, the way you think, too, about this. The last time it was this easy was the block size wars. And then finally, a little bit of good news at last. The dev team for Bitcoin are focusing now on quantum proofing, less on adding JPEGs to the blockchain. Hopefully. Fingers crossed. They're not near it yet, but there is that concern regarding the old wallets. Can they be quantum proofed or not? Mando, I know you look into quantum a lot. Is this a concern for us? I know it's not a concern immediately, but if you are a TradFi investor and you never touched Bitcoin before and you hear about quantum risk, what the TradFi people don't understand is if there is a quantum risk to Bitcoin, that means there's a quantum risk to the Pentagon, the CIA, the FBI, every bank, every medical institution, every medical record. You name it. It's the world is wrecked if that happens. Thoughts?
I think that's true. There is a narrative that they're doing something about it, though. And I feel like part of the issue is that the Bitcoin devs famously are very, I don't know, they're not unified. And there's a big split between them. I do think quantum threats will come sooner than expected. But I don't think that's going to be potentially even this decade. And maybe even further than that. So I think it's slightly being overblown. At the same time, and I've also seen this week, you've had, which Marty I think has mentioned before, but you have Bitcoin Improvement BIPs moving through at the moment, which could potentially help to alleviate this. Plus you have a number of different independent companies essentially trying to deal with this. Even Saylor seemingly put up money for like a research into addressing quantum threats. I think just seeing that is a positive sign. I think also the fact that the amount of Bitcoin held by big institutions actually helps this because they are going to take it seriously, and I think they're going to work to try and make sure this is not as big a threat as previously thought. So I do think in a weird way, decentralization doesn't help in these sort of scenarios because it often leads to slower progress in trying to fix things. But this sort of centralization around some of the major institutions, which have kind of backed Bitcoin with their own credibility, I think helps us. I do think this will be dealt with, or at least a large bit of it will be dealt with. Awesome.
Marty, what's your technology perspective?
Yeah, I mean, the basics of it is Bitcoin relies on ECDSA, right? A little elliptical curve, digital signature algorithm, which basically, a powerful, super powerful computer, like a quantum computer, which just, by the way, is between 5 and 15 years away. So we're nowhere near that. Could use something like Shor's algorithm to derive the private key from a corresponding public key, but the public key must be exposed. Now, the problem really is Satoshi's 1 million Bitcoin public key is very well known. So that's really the real risk, is the 1 million Satoshi Bitcoin, and whether they'll be burned if lost, which is the real thing. But as I said previously, the Bitcoin core team is already on this. They could do a very simple soft fork to make post-quantum proof signatures using like lattice-based technology like dilithium or something. So it's not a big deal. I think the bigger question is the risk to traditional finance is way higher.
Yep.
And this is something we speak about at length. The central bank, TradFi, fiat in general has zero protection against quantum. So the minute anybody does any threat-based vector gets quantum power, they're going to attack gold. They're going to steal all the gold.
Well,
okay. Or they go for the Bitcoin, they'll go for $10 trillion of paper gold, which has zero cryptographic security. So they'll get your Wells Fargo password and your 2FA within 10 seconds. They'll start taking money out of the bank. Okay, so I think the risk it's just the FUD of the day. In my opinion, this is the FUD of the day. There's always a FUD fork around these drawdowns. This is it.
Good stuff. Rob, what do you think?
Yeah, just my question was this, because we did a video on this, quantum computing. How many times can you try to log into your basic bank account before it locks you out? And then how much money can you actually move out of that account? Because like with quantum computing, instead of doing zeros and ones, it's all together all at one point. So as if it goes for like these banks or nuclear missile codes and things like that, like for the banks, there's only so many times you can actually try to hit it. With like an open public ledger, like Satoshi's wallet, you can keep hitting and hitting and hitting and hitting until you get it. But I think with like the banks, as I understand it, you have a limited amount of attempts. And then once it's locked out. And then to actually move the funds is a little bit more difficult because there's only so much you can do in a specific account. And then for like these nuclear codes, people say, well, you're gonna get the nuclear codes. I didn't deal with this. I was in the military, but everything has to have a chain of command and go through. So even if you have the codes to launch those things, it's not automatic. It has to go through the chain of command, and then it has to go through. So like, I agree with everybody here. It's just, I don't know per se if that one thing of, all the banks are going to go and nuclear missile codes and things like that. I think that's a little misnomer. But as far as like quantum computing, there's logical and there's physical qubits. And right now, as far as logical, we're in like the teens, maybe 4850. We need 2,330 to actually crack Bitcoin. And that ain't happening anytime soon.
Nope.
I just remember Jerome Powell was classically asked, what keeps you up at night? I'll always go back to this. He said, quantum attack of the FedNow system. So forget about retail banking. FedNow, the actual TLS secured a messaging queue for the federal banks. In other words, how banks move liquidity between each other is the biggest risk to quantum threat, in my opinion.
Yeah. And I think it was even Anthropic, the AI company, pointed their own AI to see if they could hack their own system, and they could. So there's lots of frailties out there, and the AI attack vector is also very real, not just quantum. That'd be more of a threat in my mind. Anyway, let's talk about the next little story real quick. A lot of people are asking questions. I shared this graphic before. It's basically I've got 60 different ratios on how I measure the fundamentals of a crypto chain. But if you take the market cap divided by the number of users, or the market cap divided by the number of daily transactions, or the market cap divided by TVL, or money transferred, or stable coin, you name it, you can do all these different things. But this one is very telling. This is the market cap divided by daily transactions for ETH versus Sol. Sol hit an all-time low of $500 of market cap per daily transaction. ETH is 130,000. So you're talking a 260x difference between the two. And this got people's attention. It's like, what's going on here? So first of all, Solana's never been so cheap. And Ethereum's doing really well. again, record number of transactions and users and stuff. But the big question is, what should people do next? So it was a very unfortunate story. We know somebody who had Nexo. They borrowed against their Bitcoin, their whole bag. And on the dip below 70K, they got wiped out. They lost their whole Bitcoin bag, but they still have Solana. So actually, I see you smile, Rob, on that, on borrowing against your Bitcoin. Any words of advice there on liquidation levels and leverage and stuff?
Well, I mean, that's for you guys to talk about. I don't do anything with leverage and the gambles and all those things. It's inevitable, but that's just where people want to go. No, I mean, I really don't have too much as far as leverages and trades and stuff like that. I just wish people would, be a little bit more conservative, but it seems like everybody wants to be the next great trader and the next millionaire. So good luck to everybody.
Yeah. Manage risk carefully. Leverage is a double-edged sword, and never borrow to speculate. And if you have to borrow, do it at the bottom of a bear, not at the top of a bull. Anyway, back to this story. A lot of people now are trying to rebuild. And I also said on another video that I said the odds of Solana doubling are far higher, or it could even be ETH doubling, are far higher than Bitcoin doubling. I.e., if you take the price today of, say, $75 going to 150 is very likely, very soon, and that would happen quicker than Bitcoin going from 70K to $140,000. So this is kind of the big question, and the question is, at what point would you do it? Now, when you look at the Sol Bitcoin pair, it actually has bottomed. Historically, it has been lower back when it was at that $8 treat that we had way back when. But right now, it is, again, level 1, the ATR, which is a pretty solid support level. But over to you. I'll give this one to Mando first. If somebody has to rebuild their bag, I know that L1s are very risky. All crypto is very risky. So Bitcoin is supposed to be the safe bet. And there was no all season, etc. But if you look at the fundamentals on chain, there's never been more activity all across the board.
You've got the mix, I think, here, in that obviously L1 activity is definitely going higher. I think that's kind of obvious with what we've seen with, particularly now with the AI agents. People are talking about quadrillions of transactions at the moment, rather than just trillions, right? And this is going to need to be supported by L1s for sure. At the same time, the mantra of just holding Bitcoin through bears seems like a seductive one. I've been surprised that Bitcoin dominance has not really rallied during this sort of period. It's just kind of stayed just shy of 60% the whole time. And that tells me that quantum is still driving a little bit of the worry, or at least the profit taking maybe out of Asia in Bitcoin whales is maybe driving this. I have to say, I think I still prefer Bitcoin. Like, for me, it's just easier to hold through what could be a bit of a tumultuous time for, I think, global stocks as we kind of see the effects of AI. And I still would pick Bitcoin as my number one bear market asset to hold. And although I agree that like when it gets up to like 100K, you might start to see very, very aggressive moves in Solana. They tend to happen like violently, and I think I'd just hold Bitcoin for the safety of the asset during this period. Good
point. Good advance. And there are risks to layer ones. This is an interesting angle, and it may be far out of left field. But Marty, you'll get this one, and I see you nodding, Mando, on this. We know in the next 4 to 8 weeks, Elon Musk is activating a global bank with Twitter, X. And a lot of people believe the underpinnings of that has to be some type of blockchain. Which blockchain? We don't know. But it can't use TradFi rails unless they build their own blockchain. So the question is, if Elon Musk does build this global bank with 1 billion daily active users, that will disrupt TradFi, but it could also disrupt layer ones. So again, far out of left field here. Marty, crazy thought or not?
Yeah, I mean, nobody knows. It's obviously the biggest alpha speculation of all time is what technology Elon's going to deploy. No one knows. It hasn't leaked. We know he's a big Dogecoin fan, but we know that Dogecoin is a pretty pathetic network. It can't do not even a couple of TPS before maxing out.
7.
Probably, we know that he hired Solana's guy, in his organization. I don't know. Honestly, I don't know. If you had to ask me, if I was a chief technical officer of X, obviously I would use the highest throughput layer 1 with the biggest amount of engineering behind it, specifically Solana. I mean, it's got 5 clients right now with probably the best engineers in the business, all working around the clock. So in my opinion, it's going to be something to do with Solana. Whether it's immediate, I don't think so. I think he'll have to wait for market structure, just like everyone else. His companies are regulated securities, and so he wouldn't want to take any regulatory risks. Even with what was the old Solana things that they deployed on X, where you could put a little link and it would show an actual little DEX.
Oh yeah, I forget that. Yeah.
Those, he couldn't support those either because of a regulatory regime. So I think until there's some kind of a regulatory regime, and we know we've got Atkins, we've got Selig, all of the major agencies are very pro-crypto. We've got market structure getting fought for. I think once all that gridlock passes and there's some kind of regulatory approval, Musk will unveil his grand plan for L1 use. And it's probably going to be the regular thing, Solana, Ethereum, et cetera, stablecoin. It's probably going to be a stablecoin integration. I know that ADP is just about to unveil and announce their stablecoin integration. To me, that is probably the biggest thing, which means ADP pays 80% of salaries in the US directly to your bank account. If they start paying stablecoins as an offering in so salary in stablecoins, then you're earning stablecoin, which means you're immediately crypto adopted. Things like that are, together with this X, are probably the biggest adoption axes right now. But I don't know, James. No one knows really.
Exactly, Rob.
Because it's not open source. X is not open source.
One thing I've been warning the audience for a long time is, I used to say risk happens fast, but now change is happening faster than in the history of the world by many step changes. Can you imagine, Rob, for a second, the convergence between crypto, social, like a platform like X, and finance of some sort, trading, bank accounts, all that type of stuff, and then integrating your agents within the X platform to manage your whole life and pay for your whole life? Is this, well, first of all, I do believe this future is possible. Do you believe it's possible? And second, how far away is it?
I mean, anything's possible, but it comes down to adoption. Like, have you ever guys tried to move money between 2 friends and you don't have dollars on you? Like, what do you got? Oh, I got Venmo. I don't have Venmo. I got PayPal. I don't got PayPal or Venmo, but I got here in Puerto Rico, I got ATH. And it's like, there's all these different things that are going through. It just depends on will they adopt it? Me personally, if I take a look at X, remember when X used to have donations for on your account, and you could tip people Bitcoin? I don't know if anybody even actually used that. And I know that Elon Musk got a money transmitter license for most of the 50 states here in the United States, even the US. And the reason is because he wanted to do this. Now it's going to launch. But as far as which one they're going to use, it's anybody's guess. If it's stables, I mean, you just got to take a look at the top 4 that are on USDC and Tether, and that's the best. Like I talked about last week, Binance, Ethereum, Solana, Tron. And if you think one of those is going to make it, sure. And I know their head of product, Nikita Bear.
Bhatia.
Yeah. He talked about how, I mean, he's the head of product at X, and he's also representative from Solana, or what is the term? Advisor at Solana.
I forgot about that. Yeah.
And then you think that's going to go that way, sure. But I would just say the best, if not some wacky new thing. Remember, Elon Musk was part of the PayPal mafia. He's the one that got that off the ground.
Well, yeah. And he has had this X vision for 21 years now. An everything app. We'll see if we get there. Then we have all this crazy stuff. It also goes beyond just AI and social and crypto, but now everybody can now operate a Claude bot from a mobile device like an iPhone, which is incredible feedback to your Mac Mini, and also control your life from your world. But this is the reason we talk about this and this Claude bot stuff. A couple of things. AI agents need crypto rails, no ifs, ands, or buts. And that is a $1 trillion use case. Mando, you mentioned it, quadrillion transactions per week will happen on AI agents. And it's going to happen real fast. And it might only be 1% of the population doing it, but they're going to churn like you wouldn't believe. And finally, More convergence. OpenAI, they're still looking for ways of getting back. They've lost the AI race. They've been beaten by Grok, Google Gemini, and Anthropic. And now they got this guy, Peter, and this is the most unbelievable story. He spent an hour building a way for an AI agent to tell his WhatsApp what to do to organize his life. And now he just basically got hired by OpenAI. We don't know what the deal is, probably hundreds of millions of dollars. And now he's part of that team to create an AI that builds your personal agents. Again, all this stuff is happening so fast. Where 10 days ago, Claude was launched or something, 2 weeks maybe, and now he's part of OpenAI. The speed at which everything is changing, Mando, does it make your head spin?
No, I think it's going to go much quicker.
There you go.
That's what everyone's saying. Like the difference between this revolution versus the last few seems very, very quick. You know, the age of AI, people are talking about it just eradicating thousands of jobs, huge percentages of the economy here in terms of at least jobs to start with, even though we might see massive increases in growth. So I actually think that this stage where it gets to recursive improvement, loops of AI improving themselves and doing even research on themselves, this is kind of where it gets even more silly. So I think we're only just going to begin into this. Just prepare for unbelievable amounts of turmoil. That's my opinion.
Yeah, exactly. I agree. Speed is crazy. Marty, the speed of change accelerating?
Let me just catch up. As far as stablecoin use and network use, I mean, Visa debit pay stablecoin-based Visa cards around the world, maybe not in the US, but around the world, have reached $18 billion annualized. So there is massive crypto adoption. I've been living on a stablecoin-based Solana Visa card for 3 years now. I haven't used the bank card for 3 years. So you're just behind if you don't know that. And then the other things are, PayPal just announced that they're making their default network when you pay with PYUSD, switching it from Ethereum to Solana. There was big news over the weekend. You can see that. So Solana has elevated over Ethereum. I think Solana with PYUSD and USDC is going to be this de facto standard. Now, the point of adoption in agentic finance is really always been about KYC, right? How does an agent perform a transaction on your behalf without KYC? And Anthropic is leading the way with that. There's this new MPC standard that's pretty much being adopted, and that basically lets it's a small ZK sync. It's a small ZK proof that tells the service that the agent belonged to a KYC'd user. And once that gets adopted, I think that's going to open the floodgates. I think, like Mando just said, I think you're going to see exponential agentic finance, especially with Claude Bot coming out now. You know, I'm running my own one. It's incredible. It can control anything you can do on a computer. It can act on your behalf. It can integrate with your crypto. It's unbelievable.
But be careful. Make sure you've got a very secure sandbox, my friends. Do not
make sure you do it on a completely separate thing. Don't use any of your Google passwords, your wallets, anything. Make it like a totally separate human being. Like it should have nothing to do with you.
Exactly. Well, we've got 2 more topics to go through real quick. Thank you, everybody. So don't forget, links for these legends are below. You might be watching them on their channels anyway, but just make sure you follow these people. They all have very different perspectives. This was also the week. You know, I've been talking about UBI Nation for a long time. The unrealized capital gains nightmare. It's clear that there are nations around the world, they can see down the future. They're going to run out of money. The tax base is eroding. They need to pay people benefits, especially in the age of AI. And now you have the Netherlands proposing their taxes and unrealized capital gains. It literally, the people I know in Holland, they're already making plans to exit. Some are heading to Dubai. Some are heading to Portugal, etc. Some are trying to obfuscate what they have and send it offshore. It's absolute panic stations. And yes, this hasn't been approved, but their so-called House or Congress has approved it. It just needs to be approved by their version of the Senate. I don't know what that's called in Holland, but this is interesting. And if you look at certain countries like France, 1/3 of employees, only 1/3 of the people that work in France, which is less than half the population, are working in the private sector. The rest are all working in the public sector. This is a nightmarish scenario, and we know by 2030, many countries in the world will be a UBI nation. How? What do you say to people? I'm sure I know people like CTO said on X that his inbox is full of Dutch people saying, "Where do we go? Where do we relocate to?" etc. Matthew, you raised your eyebrows. What's going on? What do you see? What do you hear?
Yeah, it's wild. I think it will go through in some form. It seems likely that it will go through. This is the first I've really seen from it. You've seen wealth taxes from a few European. I think France has a wealth tax right now, and a few other countries have that.
Sweden, Norway implemented them in the past, and massive
Right.
exodus. Yeah.
This seems even more draconian, in my opinion, and very anti-business, anti-capitalist, which is surprising because Netherlands, I think, is a bit mixed. Like they've got a huge corporate base there as well. So to see this, I think it's even shocked.
The Dutch are extreme. They're extreme innovators. They're the ones that kind of sailed across oceans first and found new ways to do trade. I think the very first stock market, very first stock was built by the Dutch. They are extremely entrepreneurial and innovative.
Right. Huge amount of companies are based at.
Well, the whole tulip thing started in Holland too, right? The whole tulip analogy.
Yeah.
No, a lot of companies are registered in Netherlands for tax, but also just for ease of business. And, it's definitely a hub in Europe of business. So to see this is kind of wild. I think maybe we see this from France as well. Like they've been kind of going down this sort of concept as well, and everyone laughed at them, and now Netherlands is going first at it. Yeah. I can't see how this works. Like, it seems very myopic in how it's been designed, and in a world of porous borders, everyone's just going to move. The EU specifically allows you to move anywhere. So, yeah, I think you're going to see massive exodus from countries that bring this in.
Well, California hinted that they'd do a 5% billionaire tax.
And everyone left.
Half of the billionaires left, gone in weeks. All of them, like Peter Thiel and David Sachs, and all bounced to Florida, to all the tax-free places, and they went through paying 14% state tax for years on hundreds of millions or billions of dollars. They didn't care. But once you threaten them with vague rules, like we're going to come after 5% of your wealth, the destructive nature of that is people think is, just give them 5% and they'll be quiet, leave you alone. But they won't. First of all, they will never leave you alone. Second of all, how does a government entity value how much you're worth? You may have to sell half of your assets to pay that bill. And that's the killer. Rob, you know all about taxes. I know you've got a lot of tax specialists coming to your channel all the time. What do you make of this madness?
I think they're gonna FAFO, and it's gonna just be a disaster, and that's pretty much it. And we can just take a look at what's happening here in the States, and it's going to happen over there. But they think they got it under control, and it's not. It's going to be bad for them. And I feel bad for Europe. I feel bad for those countries because those people didn't sign up for that. Unfortunately, they voted those people in, but they're going to screw up everything. And that's why I'm glad I live where I live.
Yeah, exactly. Good. There's one other story, but we're probably running out of time. We try to keep this to an hour, everybody. That was called Lights Out. We'll cover that next week. It'll still be very valid and current next week. Any final thoughts for the week ahead? I know Bitcoin's been bouncing around. It's gone up $500 since we started, so that's at least something. It was down
James, in response to that previous question, these are all framed as responses to globalization, right? So the globalization regime, this is all part about it. It's about tax avoidance, et cetera, et cetera. But you got to ask yourself, if the rich are moving, how do they move their money? In financial repression, how do you move value? I'm from South Africa. We had the same problem. How do we get out of the country when they stopped us from taking more than $50,000 equivalent? Well, that's what crypto is.
Exactly.
This is why it's an incredibly good use case for this globalization enabled inequality move. And so there we go. That's part and parcel a value proposition for Bitcoin. Very bullish narrative, in my opinion.
I remember Kathy Wood, if I'm not mistaken, her 2030 price prediction for Bitcoin, about 20% of the valuation is for people obfuscating money in authoritarian regimes.
There you go. Correct.
So it's a big part of the use case. And again, I know on the ground now, people are trying to make sure that their holdings of Bitcoin has no digital footprint in the eyes of the government or their version of the IRS or tax authority. Have you heard those types of stories too, Mando? People trying to obfuscate or at least move their wealth, maybe sell a house, rent it for the next 2 years, put it all into crypto, put in a key hidden in a desert somewhere and nobody can find it or trace
Yeah,
it.
of course there are.
Sounds like me.
That's been the case forever. I don't know if it works, but yeah, like I don't know. As I was coming up in crypto, I felt like 50% of people in group chats used to pay taxes. Now I think it's actually higher, but yeah, there's still definitely people who try and avoid.
Yeah.
You don't pay.
Thank you for that tax advice, Mando.
I'm not giving people bad tax advice.
I'm kidding. Of course, we don't give any advice. We just sit. This is called Coffee with Friends. This is the show. Yeah. Rob, any final words on the could maybe between AI agents triggering layer ones and X and global banks and everything else, and you've been able to pay your person at a restaurant with X. What about tax avoidance or evasion or whatever the words are?
Well, we go for tax minimization. We never avoid taxes. We welcome them. We pay for them when we have to, but we minimize those as much as possible. And this is the time to actually think about it. I know it sounds weird, but you know what the worst thing is being massively up, and then you have to pay the government, what, 20, 25, 33% or something like that? That's the worst time. I know it's not like in everybody's wheelhouse, but whatever you can do to minimize your taxes, start doing that ASAP, because once the bill comes due, you're going to have to pay it.
Exactly. Well said. Thank you, you legends. Really appreciate you being here on a Monday. For everybody, thank you to the mods in the chat. Don't forget links below for all these brilliant people. Have a great week, my friends. Look forward to the stock market opening tomorrow.
Absolutely.
Take care.
Thanks for joining us. Thanks for putting us on, James. You guys have a good day.
Thanks, Marty. Thanks, Mando. Thanks, Rob. See you soon. Bye.
Peace out.
Bye.